the tiered pricing model where you could have lower transaction fees based on percentage, and once you do higher value transactions. And typically it's about commercial really drive for agents, what makes sense. If you think about an agent, if he's going to invest $10,000 in liquidity, and he's going to earn, $10 for a $1,000 transaction, does it make sense for him? If he's going to earn $1, and he's got to turn that $10,000 over how many times to make sense. Just really finding that balance and what makes sense in the market to what agents are willing to invest in. If it's better for them to invest in selling Coca-Cola or other FMCG product than investing in electronic money and doing that business, then it's really hard to get it off the ground. So you really have to find that balance between them investing in other products and services to providing cash and cash in and cash out services. So I'd say those are the things. I think there was a third question I might have missed.
The number of mobile money wallets coming in.
Oh, the stickiness.
Yeah.
Okay, so I'm on slide 2. I don't know what I'm doing on time, but I'll try and get there's some more answers on that question on the stickiness. I still got an hour left. Okay. Yes. Yes. Sorry.
I was wondering that in your experience across different countries, what would be the killer use cases or applications of the mobile wallet that really drove adoption? Like, for example, in this country, the number one digital wallet is not actually from a mobile operator. It's actually Coins@PH. And the thing that that drove adoption was it was where people could buy and sell bitcoins. So that was in a way unique for that wallet. I'm wondering, in other countries, what are those killer use cases that really drove the adoption?
So again, a really good question, and I'm hoping some of my slides further down will answer that. But it's different to different markets, and I think if you look at again Indonesia, you look at China, you look at India, right? So I'd say a lot of Asia developed from the e-commerce social platform space, and then where they jumped or pivoted from there to payments. If you're looking at when it went to compete really with mobile money and payments space. So if you look at like WeChat and Alipay, it started on e-commerce, started on social platforms, and then pivoted to payments and then finance. If you look at Gojek, started from ride-hailing, and then went into payments, right? And the same now with Uber launching wallets. So they built scale in another area. They got a huge base of customers, and then said, hey, we can also enable transfer of value through this. Let's give them a wallet. If you look at Africa, where a lot of it is still very offline, we don't, even today, still e-commerce is still relatively low adoption rate, low smartphone penetration in a lot of the African markets. There it really started from this cash in, cash out models, agent networks, and really building out infrastructure that didn't exist because there was no banking infrastructure. Low banking penetration, and we gave people the ability to move value over distance. And as I mentioned, the bus example. So there was nobody else addressing that need. If I wanted to send money from where I am today to a rural, I had to wait 2 days, it was expensive. So it solved that problem. Then a number of other use cases. I'd say that a lot of the cases, the first use case that was adopted was buying airtime to your, I'd say, because the telcos typically would give like 500% bonus if you bought airtime through the mobile money wallet, because they wanted to encourage the usage of mobile money. So they'd give them huge bonuses in airtime to buy through that, because it also has a cost saving in doing the physical cards and vouchers that they distribute. So, yep, is that okay for now? Hopefully there'll be some more answers. So I wanted to kind of talk a little bit about the state of the industry to give you an idea of where we are today in the scale of mobile money. What I have to mention at this point, when I refer to mobile money, it doesn't include WeChat and Alipay and these providers because they are linked to bank accounts. So these are accounts that are not directly linked to bank accounts, right? So it means the individual customer accounts are only reflected on the mobile platform. It is not reflected or a direct link where you have a bank account and then open a mobile wallet linked. So a number of the providers that we're talking about in these Asian markets are actually bank customers that has now have a mobile wallet as well. So we have today over 866 million accounts. We expect by the end of this year to reach 1 billion mobile money accounts globally. It's 272 deployments in 90 different countries, and we see that there's already 54 countries that have over 1 million active users. Oh, sorry, 62 and compared to 54 and 27. So there's been phenomenal growth in this space on the number of mobile money accounts that are out there, and this is globally the number, and 20% increase from 27. So this is the data up until end of last year. The new report will be available February next year. So just some of the other statistics. So we see that on average we move around $206 per month per customer. We process around $1.3 billion a day on mobile wallets. What is interesting and what's important, and this is a little bit about the use cases, is this part here, that we can now see that that the digital transactions are growing twice as fast to cash in and cash out. And why this is important is to the question of the cash in and cash out agents and the cost and the commission, is it's an expensive part of the business. It's expensive for the operator and it's expensive for the customer. So really, the more we can keep transactions digital, the more the cost will come down, and the less need to go from cash or physical cash back to digital, right? So, and this is something that over time we really want to see reduce even further. So, but it's a good indication that there's already a lot of use cases happening to keep money in the ecosystem. Okay, so these are some of the key trends that we want to see, and the slides will kind of talk, that I'm going through further now, will kind of talk on these 4 topics. So we're looking at an enhanced customer experience, diversification of the financial services ecosystem, and by this, again, we're talking a little bit about the use cases that you mentioned and kind of these new players that are out there. So 5 years ago, when we spoke about mobile money, everyone kind of looked at mobile money as mobile operators offering digital services. Today, there's so many different flavors of mobile money out there, and it's offered by a number of different types of industries and sector players, and we'll look a little bit at who are those players today. We'll look a little bit at the expansion of the mobile money value proposition. This is again looking at the future of mobile money. What are we seeing the trends that need to happen, and where as an industry we'd like to be in the next 5 years. And then a little bit about what's happening in the regulatory space. I'm not sure how many policymakers or regulators are in the room, but just a little bit what we share, what we've seen across a number of markets, and probably some of the key areas to help unlock this industry and the importance of this industry. So looking at a little bit the growth in the accounts, again looking at Asia, we see that they've reached over 382 million accounts, and it's been growing steadily. And actually it's been the fastest growth out of all regions today. And they had a 31% increase in activity, or growth, year on year since December 2018. So it really is a positive growth in the industry, especially in Asia, very fast growth of mobile money and mobile money adoption. And we'll see some more of the interesting stats here. So in East Asia, we can see that the number of mobile money deployments have increased in South Asia from 38 to 40, and in East Asia Pacific from 29 to 41. But I think what is interesting is this statistic over here, which is showing that the number of deployments that have reached 1 million active users went from 0 to 9 in the last 4 years. And that's a really good indication of the scale and activity that's being driven. It's not just customers being registered or, PR, oh, we've launched mobile money. It's actually mobile money that's scaled and really starting to deliver, use cases and addressing needs of customers. So that's a really important indication for us, and a lot of the growth that we've seen in Asia is coming from this number over here. Sorry, this is a little bit small, but I guess just the highlight over there. Again, this year-on-year account growth is around 38% in East Asia and Pacific, which is the highest, and it represents 11% of the total mobile money accounts globally today is sitting within that region, which is a really great thing to see, the scale and growth that's happening. I think here again, the most important is if you look at a percentage of the adult population within these two sub-regions in South Asia and East Asia Pacific, is that it's moved from around low single digits, 2%, to 22% of the adult population in 2018, in South Asia that are starting to use mobile money or have registered for mobile money account. And in East Asia Pacific, it's almost also 20%, around 19%. So again, just that scale and the level of adoption that's happening within the region, which is really positive. This is looking at the value. I mentioned earlier we're processing around $1.3 billion a day. We're looking at it now at a total within the region. It's around $12 billion per month as of December 2018. That's just within this region. And it's a 245% growth since 2014. So a really positive growth of the total value that's being processed through the business. This is in that month, right? So within December 2018. Just a brief snapshot, and this is looking at some of the use cases. So at the bottom here, you can see the use cases we're talking about. So I spoke about P2P transfer, the movement of value between two mobile wallets. Bill payments, which is those collection services. Bulk payments, this is typically the disbursement of value. So this would be salaries or wages that are being paid to users. So from a business to a customer. And then the yellow would be international remittances. Next would be merchant payments and then airtime top-ups. So again, we're looking at the Southeast Asia region and the South Asia region and the global average. I think there's not too many differences. The light blue here representing airtime top-ups in volume, and as I mentioned earlier, it's still one of the strongest use cases, and it's small value transactions, but it happens quite frequently. People top up 4 or 5 times a month, on average. So there's a lot of small value transactions, people topping up $1, $2 per transaction, right? So it's really small value. But if you look at the value of transactions, P2P is the largest representation of value. This is the green one here. I think the interesting is the 16% here and the 11% if you look at the global average, which is bill payments, showing that in South Asia actually bill payments has evolved a lot more, and there's a lot more bill payments and value happening. And also you can see in the volumes here, the purple there against the global average. It's showing a good indication. Sorry, question. What kind of? So airtime top-up is typically where, let's say, T-Mobile, or let's use China Mobile, is selling their own product. So the airtime that you use to make phone calls or to access the data services, so that would be them selling their own product to the customer. So as a mobile operator, selling the airtime that customers use to phone or to access data services. That's typically the airtime we refer to. Yeah, does that answer your question? Yeah.
And one more question from previous slide is, which characteristics of active customers or active...
This one.
Active customers. What are the characteristics? Who are active customers?
So in this case, we look at customers that have done a transaction, a revenue generating transaction within 90 days. So this does not include like airtime, not airtime, but account balance checks that would exclude. Is anybody that's had a transaction that has generated some form of revenue or cost? So cash in, cash out, remittance, anything that is, I'd say, movement of value between two accounts would be transacted within 90 days. So we take 90 days as kind of the figure to look at activity. Yeah.
Is the bills payment index also includes the payment of the FMCG purchases for the stores?
No, so that would be sitting under merchant payments.
Merchant payments. So that's the payment for FMCG.
Like retail payment, yeah. So for FMCG goods, it's under merchant payments. Yeah. Bill payments are typically large collection accounts where it's one company that wants to collect money from a lot of customers, like nationally. So here we'd look at, for example, pay TV as an example of a bill payment company. So they would, customers want to pay their TV subscriptions. They could do it through mobile money, and it reduces the cost of companies of putting in their own collection infrastructure or pay points in the country. So typically you would have them as distributors, then there would be bill payment. So where there's large distributors that want to collect payments, so the question was, where does Unilever and Procter & Gamble and these guys sit? It could be a bill payment if it's the distributors. So it would not be, merchant payments would be going, a customer paying a retail shop. So that would be similar to a Master or Visa card payment that you would consider. So the use cases that are growing significantly within the region, definitely international remittances and merchant payments. For me, international remittances are key driver of mobile money, especially in this region and actually to all of the developing countries. Because of the massive migration that's happening today, the importance of allowing people to remit money back through mobile money is critical. And I mentioned our focus on the SDGs. So SDG 10, which talks about reducing inequalities, one of the specific ones there is reducing the cost of remittances. And it's, I think, 10.C3 or something, 10.3C, which is the within the SDG target, is to bring down the cost of remittances. Mobile money has successfully done that. Today, it's the lowest cost to remit money globally is through mobile money. And this is studies done through the World Bank, through IFAD, a number of key parties that have tracked this on an ongoing basis, that have showed that mobile money can significantly reduce it. I think the target is 3.4%. Mobile money does at 1.7% globally on average for the remittance cost to send back. So this is vitally important for regulators. How do you enable this? Because a number of markets today restricts the remittances through mobile money and doesn't allow for the movement of value cross borders. But there's very easy controls, and typically most of the settlement happens through banks anyway. So it's not that the value actually moves across countries through mobile money. The settlement of that value is still happening through the bank. As I mentioned, it's all pre-funded. So the value has to already be there for the real-time transaction to take place. So it's just about a settlement between those two parties and through the banks that happens the same way as you would have normal remittances. But there has to be a relationship formed between the sending party and the receiving party. And today we do it with a number of the large NTOs, like I mentioned, Western Union, World Remit, MoneyGram, RIA, and all of these money transfer players today have connections with mobile operators. But then there's also relationships between mobile operators and banks that do it. A good example is in Cambodia, for example, with one of the providers there called Wing. They have a relationship with Korea. So a number of their diaspora, people that work across in Korea in the garment factories in Korea, for example, remit money back to Cambodia, and that's through one of the Korean banks. And that money is transferred through the Korean bank to Cambodia and then remitted through Wing to the agents for the families to collect it through the agent network, because it's the easiest, most convenient way and less costly way for those people to collect the funds in country. So there's all of these relationships that's developed. Yes, sorry. Previous slide. Yeah. Yeah. Yeah, it's very small. It's around 4 billion, 5 billion globally, and I think the remittance market is around 500 billion today. And mobile money represents around 4.something billion, 4.3 billion, I think. So it's still tiny, but the opportunity is massive. Yes, within the region, yes. Yeah. It's obviously from a small base, but it is the fastest growing, and again, because of regulation, that's allowed. Sorry.
Where did you take those data?
This data?
Yeah.
This data
It's
we
in
collect from
another one.
operators.
Huh?
We collect from the industry. So all of the members, mobile money providers globally, that belong to GSMA. So we, like I mentioned, 272 deployments. They submit their data, so we have a request for all of this data, transaction volumes and values per use case, and they submit that to us.
Thank you.
Excuse me.
Yes.
One more question.
Sure.
From your experience, what would you say are the main reasons why, despite such a massive size of remittances, mobile money represents such a small share of transmitting them? Is it regulation?
Yeah.
What are the main impediments?
Yeah. To the most part, it's because of regulation. That's in a number of markets. You're not allowed to remit even outbound, so typically it's only inbound that's allowed. And then, I guess because there's still a lot of the control sitting within the MTO space and the money transfer operators, the legacy operators. So there's a lot of exclusive arrangements, which mobile money providers can't enter that space. And even with a lot of banks, it's difficult because banks also there's certain banks that have exclusivity on certain corridors that won't allow other providers to access. So there are some challenges from a regulatory stance. I think it's changing a lot, but it's really only changed over the last couple of years. So there's still a lot of work that needs to be done. And I think this year, for the first year, that actually the global remittances will exceed the direct foreign investment value, right? So this is a massive opportunity to grow, and this is going to be one of the key drivers for a lot of developing markets, is the value of flow. Yes.
Mobile money has a tendency to be kind of national based, by a lot of them being provided by telcos.
Yeah.
So that actually makes international remittance harder. So for example, I might do things in Australia with one wallet, but I can't directly transfer that over to my mobile payment provider here.
Yeah.
So I actually transfer via crypto, for example.
Yeah.
And so I switch that back out, so it doesn't necessarily look like it's an international remittance
Yeah.
via mobile money.
Yeah. That is possible. I think that a lot of that does happen, that people do switch between different channels and then you don't pick it up as a mobile money transaction. Again, I think that, in Africa there's a number of these, like in Kenya with Pesa, for example, which is the international leg is all crypto and then it's cashed into the wallet domestically. So the cross-border, you don't see it as part of the mobile money transaction. It's only when the value flows from the Pesa locally into the local mobile money wallet, or it's get exchanged, the Pesa exchange at that point. And I guess it was the same for like Libra as an example. And typically in the Libra cases, if you look at where that would go, it would be similar. Is that it would be this international layer that would sit in the digital, and then when it reaches the local domestic market, it will be converted into probably an e-money provider's wallet at that point in time. You get cashed out, because I don't think Facebook is going to build a cashed out cashing network in every country or try and work through all that regulatory barriers to markets. So they'll probably work with those types of players. Any other questions? Yeah. Okay, so looking at smartphone, and I guess this is also one of those important things when we talk about the new use cases and where the industry is going. One of the interesting things, again, is within Asia, is that a lot of the transactions today are done through smartphones. It used to be at the year of 2017, so almost 2 years ago now, it's at 74%. It's gone down to 57%. One of the interesting ones for us, maybe not so much for this audience, but is that in Africa it's still majority done through USSD. And even though smartphone penetration has increased, people are so used to using USSD as a channel that we're struggling to convert customers to move on to apps and start using the app. They just find the USSD channel convenient enough for them. Unfortunately, when you want to build out of all these nice new use cases, it's really difficult to do it through USSD. You can't offer e-commerce and all of these types of products and services on a USSD channel. It's just not feasible. But the exciting part is Asia. If we look at today, we're saying it's around 60%, and we expect in the next 7 years it will reach 82%, which will again open up a lot of opportunities and more use cases and further access to people to get access to these types of services through smartphones. So this is really where we see the industry going, and it's important, I guess, when you look at, for example, eKYC and these types of things coming into the market. And I think Asia's done it really well. In a lot of the markets in Asia today, you can onboard yourself electronically by scanning a copy of your ID and effectively get a wallet with a very low KYC or very low limit, because it's got a low KYC requirement. But at least people can start getting access to their first financial access, your store of value. Yeah.
there's no change happening in the USSD. Why do you think, what is the reason behind it?
That's the answer I don't have. No, we've really looked at, and a lot of the operators have tried. I think it's twofold. One is that we're adding a lot of new customers that are coming on board as USSD. So even those customers that are shifting to apps, it's not happening fast enough. And then the overall growth here hasn't really been within the market on the adoption of smartphones. It's much slower than in Asia. So the people that have access to smartphones has not grown as fast as what we see in Asia. And then people are just happy with USSD. They're so used to it. You know.
It's a problem of behavior change. I feel
Yeah.
that. What about the cost of smartphones in Africa?
The cost has come down significantly. You can get an Android smartphone today for $20. A lot of the Chinese handsets are available in Africa today. So it's not. I don't think it's a cost barrier. I guess from a poverty level, you know, the access people, you know, living on less than $1.50 a day. You know, there's a huge group of marginalized populations in Africa that will still struggle to afford a $20 smartphone. But at the same time, it is also a case of the connectivity and network coverage. I think in Asia, generally, most markets has a better level of coverage than we have in Africa. So